Taking a loan for foreign studies is common, but understanding all the terms and conditions and getting the loan on the right terms is unusual because most of the people are not aware of the common terms related to education loans. And if you are one of those, then this video is for you because in today's video, we will discuss 10 terms related to education loans. So be sure to watch the video until the end. But before we proceed, don't forget to subscribe to the channel. So let's start the video. The first term is moratorium period. It means that you get some extra time to repay your loan, which starts after your course completion or graduation, because not everyone will get placed immediately after the course ends. That's why they give you a grace or moratorium period of 6 to 12 months. So the grace period is course duration plus 6 months to 1 year. This not only gives you an opportunity to start your career, but also a chance to stabilize your income. The second term is a co-signer or a co-applicant or a co-borrower. A co-signer is an individual who is responsible for your loan along with you. This can be your parent, sibling, or any blood relative. In India, due to RBI guidelines, an education loan cannot be taken without a co-signer or a co-applicant. Their role is important because they share the responsibility of your loan repayment. Moreover, having a co-signer with a strong credit worthiness strengthens your loan application, increasing your chances of loan approval and getting a lower interest. The third term is a sanction letter. A sanction letter is an official document that confirms your loan approval from the lender. The sanction letter contains various components of your loan, such as sanctioned loan amount, interest rate, university, course detail. Reviewing the sanction letter thoroughly is crucial because it provides information about your loan detail. If you have any doubts, it is essential to clarify them with the bank. The fourth term is margin money. Margin money is the amount you need to contribute to your education cost, which can come from your savings, scholarships, or grant. You don't get a loan for the entire education cost from the bank. Instead, some banks may require you to contribute a portion of the total education cost while they fund you the remaining. For instance, the bank may provide 90% of your education cost as a loan and you need to arrange the remaining 10%. However, most of the lenders offer 0% margin money loans, which covers 100% of your education expenses. But typically, margin money ranges from 0% to 15%. The fifth term is the processing or origination fee. Lenders charge a processing fee to process your loan application. This is a common charge that most lenders inform you about. It can be a fixed amount or a percentage of the loan amount, with the specific structure varying depending on different financial institutions. Also, it is important for borrowers to factor in the processing fee when calculating the total cost of the loan and consider it alongside the other terms and conditions. Additionally, some lenders may offer discount on processing fees as part of promotional campaigns or based on the borrower's creditworthiness. The sixth term is fixed interest rate. Fixed interest rates are the interest rates that do not change over the life of the loan. This is in contrast to the floating interest rate, which can fluctuate based on the market conditions. With a fixed interest rate, you will know exactly how much your monthly payments will be for the entire loan term, making budgeting and financial planning easier. Also, you will be protected from any increase in the interest rate even if the market condition changes. However, you'll also miss out on any decrease in the interest rate. The seventh term is variable or floating interest rates. Variable interest rates mean that a loan's interest rate is not fixed. It can change based on the market conditions. The concept of variable interest rate is that your loan's interest rate is linked to a benchmark decided by the RBI or the lending institution. If the benchmark rate changes, your interest rate changes accordingly. Variable interest rates can either benefit you or cost you depending on whether the benchmark rate goes up or down. The eighth term is collateral. It means that you need to provide an asset to the bank as a guarantee for your loan. This asset can be your property or fixed deposit, excluding agricultural farmlands. See, having a collateral is like giving the bank a safety net, so they feel more comfortable lending you money at a lower interest rate compared to loans without a collateral. These are called secured loans, and they usually give you access to higher loan amounts with lower interest rates. Remember, the collateral value typically determines the loan amount you can get, usually a percentage of its market worth. While offering collateral potentially unlocks better terms, it's always wise to compare different lenders and choose the one that suits your specific needs. The ninth term is balance transfer. See, balance transfer in education loan involves shifting your outstanding loan amount from your current lender to another one offering more favorable terms, typically a lower interest rate. Balancing your balance can significantly reduce your total interest paid and lower your monthly EMI. Just be aware of the potential processing fees. Ensure the new loan offers real benefits before making the switch. The 10th and final term is early repayment penalties. Early repayment penalties or prepayment charges are applied when a borrower wants to repay and close their loan amount before the agreed upon tenure. Usually, education loans in India do not have prepayment charge if the student wishes to pre-close after 6 months of availing an education loan. However, it is essential to read the terms and conditions to ensure that your lender has not imposed any foreclosure charge. According to RBI guidelines, banks cannot charge prepayment penalties for education loans. So these are the 10 education loan terms that will make you a confident and smart borrower. If you need more assistance with education loans, you can visit edufund.in, where we provide personalized advice, scholarship opportunities, and education loan options. Check the link provided in the description for more information. Don't forget to subscribe to the channel for more interesting and informative videos.